of you folks out as well. And in the last few minutes, yeah, we'll have the end and the checkout of the session as well. The discussion is primarily will be in English, but kita orang semua orang korang ni orang Malaysia kan, so BM lah, boleh lah, rojak lah. So there's a hint to Kenny as well, yeah. And if you need to quote something in another language just because it makes more sense, you can do so as well, yeah. But please provide the translation. 欢迎分享中文。Tamil pakai tu kola tayan ka vendam. Is that right, Roshan?
Whoa.
Bro, you're speaking to a coconut. I have no idea whether you're right or wrong.
All right. All right. Without further ado, then, all right, let's get on with a super quick introduction. So we have 60 seconds, 1 minute for each speaker to, just kind of super briefly share a little bit about yourself and, what you hope to be talking about and what you're feeling right now. I'm just going to go left and right from my screen. So, Marshall, why don't you start us off, shall we?
Hey, thanks, Stephen. All right, this is Marshall here. I'm a licensed financial planner from FA Advisory, and I also run my own personal finance blog, which I write when I see interesting news about personal finance. So you can look at my profile and learn more about what I do. Thank you.
All right, MJ.
Hey guys, MJ here. I'm a mom. Yeah, so value investor mom. I'm actually a teacher for the past 15 years, and recently I've been doing more on training basis, training teachers, trainers. So I do have a blog as well, valueinvestormom.com, but I have to confess that I have not been very hardworking in updating it due to #momlife. So I believe in financial education should be shared to everyone from since young, on all the way to teenagers and adulthood. Yeah. Thank you so much.
All right. Thanks, MJ. Giant.
Okay. Hi, everyone. Good evening. My name is Idam. I'm a co-founder and licensed financial planner with Vantage Advisory. As you can hear from Steve, he calls me Giant. That's from Doraemon. It's not because of my size. All right. Thanks.
Are you sure about that? All right. Anyway, Kenny, you're up.
Hi, good evening, everyone. This is Kenny here. Thank you so much, Stephen, for inviting me here. I'm a real estate agent, so I help people own houses. Before this, I used to be a banker, and recently I'm a published author as well. You can follow my profile to know what I do. I do have a lot of social media channels where we can stay connected. Okay, thank you.
So are we expecting to hear you speak in BM tonight?
Tak ada, boleh bah kelakau.
All right, and before we jump to Kai and Roshan, we have, hey, Dividend Magic is in the house. So we're just going a super quick round of intro. So over to you, bro.
Hi, guys. Hi, can you hear me?
Yep, hear you loud and clear.
Sorry, guys, a little late. So yeah, I'm Lee here from Dividend Magic. I am an investor and mainly stocks. So don't let the name Dividend Magic fool you guys. I'm not really 100% dividend investing per se. So more on growth and dividend investing. And yeah, I'm on social media. I have a blog called Dividend Magic. So yeah, if you want to find out more about me, my profile and stuff are all on there.
All right, thanks, Lee. I'm not sure now to call you Lee or Han or DV,
Yeah,
so I might mix that up.
Yeah, just Lee is fine. Thanks, Lee.
All right, Lee. Okay, over to Kai actually to say a few words. All right, thanks, Kai. And Roshan to take it home.
Hey guys, as maybe some of you would have heard earlier, my name is Roshan. I'm a producer and presenter with BFM Radio. the morning show. But what I'm most proud of and my favorite thing to do is the weekly personal finance show, which I've been producing and presenting now for 2 years. That's Ringgit and Cents. So I guess I'm here because I talk to a lot of these guys about money, and it's been a lot of fun. So if you have the time, come and join us every Thursday at 9:30 a.m. Or if live radio is not your thing, well, just download the app or subscribe to the Ringgit and Cents podcast wherever you get your podcast. But yeah, that's basically it. I'm a personal finance nerd, and no apologies for it.
All right, awesome. And I think the personal finance nerd tag really suits you well. We're still waiting for you to come on mypf.
Anytime, man. Let's work on that.
All right. So, firstly, Happy New Year to everyone. We're still in the midst of New Year, and happy birthday, everybody! Today, for the Chinese New Year celebration, is actually everybody's birthday. So we are right into the New Year. So, what is the number one topic that Malaysians must know about personal finance and investing in the new year? So let's just jump right into it. It's free for all. Let's have fun along the way. But yeah, let's get Marshall to actually get us started off. What's the number one thing Malaysians must know about personal finance and investing?
Hey, thanks, Stephen. It's actually a very tricky question because you assigned a topic for me. But if you were to ask me that way, actually I would be thinking that the number one thing you must know about personal finance is actually to understand yourself better. Even though it doesn't sound very financy, but personal finance to me is like you really need to understand where you are right now and where you want to go. Because when I talk to clients, usually they will think of what kind of investment lah, what kind of product to buy lah, what is this, what is that, right? But when I ask them, back then when endgame was still very popular, what is your endgame? What do you want to do in your life? And what is your exit strategy? Usually I will usually catch them unprepared because they don't really know what they want to do, or what's the end game they want to achieve. So I think the number one thing about personal finance is actually to understand yourself better. That's my take on it.
Right, or in another way, are you saying that this Chinese New Year, the one thing we should all be thinking about is dying, really, and how we die?
No, not really dying. Dying is it's something that's certain, as the saying goes, you can't avoid tax and death. That's the two things you can't avoid, right? But besides, besides dying, we're not trying to go into that direction in this conversation. But what else do you want to achieve? Sometimes you want to achieve something that is huge, that may take many, many years to achieve. And sometimes you have some mini goals that you want to achieve along the way, such as, for example, you traveling, for example. Let's say if you want to go you want to travel to somewhere, that's your destination, right? But along the way, what do you want to do? What do you want to experience during your trip? So, things like that, personal finance is just a plan for you to achieve what you want, because in the end, money is just a tool to exchange for the thing that you really want, right?
True, I truly agree on that. It's a journey. Technically, though, about taxes, you could go to a country that you don't have to pay taxes, but this is a side thought. I know some of you guys, well, even the speakers as well, I think it's the first time as a speaker on the platform. So even if you're a speaker virgin, don't be shy. Just feel free to jump in. And for the audience as well, again, feel free to raise your hands, your questions, things you want to know. Jayan, you want to share some thoughts on either what Marshall has said or what should Malaysians know?
I think for me, I spoke with Roshan about this last year already, which is I think the pandemic has essentially turned a lot of people's personal finance on its head. Pretty much that everyone sort of needed to take a look back at their cash flow, at their debt situation. Some people got in trouble because they probably lost their jobs and now have to realign their cash flow. Some people found that they actually have more cash because of the current situation of working from home and not traveling and not being able to go out and spend, basically. and suddenly they're flush with cash, and then perhaps this is where you can see the mania of investing into the stock market or Bitcoin or all these other and all these investing gurus popping up online. So I just feel that before people make all these like major decision or investing decision, they really pretty much has to take stock and on their cash, yeah, and their debt situation, and you know what needs to be settled first. Is the investment decision more important than maybe settling some debts? Is there some debt alignment that you need to make, like refinancing, things like that, you know? So it's an opportunity, I think, every year to maybe reset your financial situation, see where you are, take stock, and then make the decision from that point onwards.
Right, and that's totally so true. I'm seeing people at really two extremes really for Malaysians. There's one that's facing actually pay cuts, 70% or more, losing their jobs. And on the other hand, there are these people who have just way too much money on their hands now because they're not traveling. They're wondering what to actually put the money on. So it's no surprise that a local online brokerage actually recorded record numbers of brokerage account openings over the last year into this year as well. What other stories have you guys heard about, related to emergency savings or debt situations? Roshan, you have any good stories to tell us about that?
I mean, you invoked emergency savings, lah. That's one of my pet topics right this year. I think you asked
Yeah,
me.
yeah, I saw you totally unmuted there, man.
So when we take a look at this situation, I have to say, except for my own personal story, right, which is basically, before last year, I wasn't really too concerned about emergency savings. Yes, I do the show and I'm this personal finance nerd, but I was more concerned over the investing and yeah, actually, it was just pretty much just the investing part of it.
It's more sexy, right? Investing.
Yeah,
Savings are boring, man.
Correct. And I mean, I had some amount of savings, but I hadn't prioritized it. But the minute that not the market crash, but the minute we started seeing economic issues last year, and I'm in the media industry, so for us, advertising revenue was down. You can see the public reports for most of the radio stations. AdX was hit last year, and we started feeling this worry, as it is media overall wasn't doing that well. Radio has been good over the last few years, but there was definitely some concern there. So the first time in my life I felt, and as a first time in my life working, I felt this anxiety from job security and things like that. And then I realized how important the emergency savings was, because what it does is it creates a little buffer for you. It helps you sleep at night. Personally, it helped me sleep better at night. It helped me, as long as I had that once I reprioritized the buffer, I had 6 to 9 months, maybe at that point. I definitely had 6 months of expenses, right? And which gave me a little bit of, okay, if anything happens to me, I've got EIS, and then I've got these 6 months additional to, buffer me through and look for a new job and things like that. So I'll be okay for a year. On top of that, having that emergency buffer protects my portfolio from being impacted from having to sell positions that I don't want to sell. If having to, and on top of that, also not being able to buy in when the market fell, right? So these were all the things that came to mind at that point. I personally believe that emergency savings is one of the most important things that we can all do. And as another guest I speak to quite often, Rajan Devadasan, always tells me the minimum is 2 months, right? Because you need 1 month expenses to pay for the first month you've lost your job and you're looking for a new one. And if you're super amazing and you get a job within that first month, you still need another month of money for expenses, because your salary only comes at the end of the month. So personally, while we start this new year, this new Lunar New Year, I think emergency savings, now you're not going to be able to get it overnight, right? But it's making it a priority can really do wonders for your mental and financial health. But in terms of stories, Stephen, I don't have any particular stories, just that mine that I reprioritized it to kind of
No,
keep myself
it's good,
safe.
really. Your own story, of course, is the best story. In fact, I would think that a real minimum of even 3 months, actually, and even more, it's really needed. I'd love to hear from everyone as well. What do you think is the ideal amount of emergency savings to have? And if you don't mind, share what's your actual amount of emergency savings that you have, whether you call it emergency savings, your rainy day fund, your mojo fund, or whatever you call it.
Yeah, Stephen, if I could just add one more thing there, right? Just to jump on that point you talked about earlier, that there's a dichotomy in Malaysia. There are people who are struggling, and then there are people who have basically cash to burn because they're not spending in other things. Towards the last few months of last year, property sales were up. We saw, I think it was an average of 58,000 cars being sold a month till the end of the year because of people tapping into the SST and low interest rates and things like that. So there is money to, and I just hope that people aren't taking advantage of the loan moratorium and the low rates to buy new things as opposed to channeling it into emergency funds, right? I think Idam, we talked about this last year as well, how using that as I think you mentioned it earlier, right? Using it as a reset, essentially. So you've got a 6-month moratorium, maybe you channel that money from the principal and the interest into an emergency buffer as opposed to, I don't know, putting it in the stock market, for instance, or buying other things.
Yeah, I mean, I would say it was a unique situation, especially during that moratorium period. But I do think that there's still things that can be done, especially now, in basically realigning or basically re-looking at your current cash flow, because this pandemic really changed a lot of things, and definitely suddenly you realize you actually don't need those additional expenses that you probably had done in the normal months before the pandemic. It turns out that you can live without certain things. It turns out that you don't need to buy X amount of or RM amount of new things every month. So those cash can definitely be transferred over and to fulfill some of the things that you mentioned just now, like emergency fund as a number one priority.
All right, and so what's the ideal amount of emergency savings in your opinion, and how much do you have?
I can add on the beauty of emergency fund. I gave birth to my daughter in December 2019, and I made a choice that I wanted to take a sabbatical to take care of my daughter, and thank goodness to the 6 months emergency funds that I have, and I can have a choice to make that happen. And when I share that to many of my colleagues and female friends out there, they say how could you not work? Like, how could you afford to not work? Then only they realize that the planning or the thoughts ahead, the idea of having a safety buffer fund is actually crucial. May it be to survive through the pandemic, or one of the key things is you actually have a choice to do what you want. So if you said about what is the ideal number, this is one thing I've been sharing to my peers as well as my students. If you are, let's say, a single and don't have a family commitment whatsoever, 3 months is a good number. And let's say if you have a spouse or a small family, 6 months at least. And once you have a child or more, it would be good to have a 12 months emergency funds. That actually can really buffer a lot of emergency or a lot of accidents moving forward. Yeah.
Yeah, and then not just on financial side, I think having an emergency fund is also leaves a lot of emotional problems, and also I would believe quarrels within the family if finances are tight. Yeah.
Totally as well, and especially for those who are facing income instability or possibly losing a job, at least 12 months. If you're looking to actually become an entrepreneur or start up your own thing, I learned from my own experience as well, stepping out from employment to do my own thing. 12 months is the bare minimum. You're probably better off with 18, 24 months to be true.
Totally agree with that, Stephen. So if you're an entrepreneur and you plan to, start your own business, or maybe you're thinking of starting something new in the new year, be sure that you have at least, like what Stephen mentioned, at least 12 to 24 months, I would say, of emergency funds. Oh, by the way, I don't think we have discussed on how do you calculate, when we say months, do we a lot of people will ask, do we take the income or do we take expenses? I would like to hear the thoughts from the floor, from other speakers as well.
I
Anyone?
consider it expenses though.
Yeah,
6 months of expenses.
right.
6 or 12.
Yeah,
yes.
same here. Expenses. I think.
Yeah, same here. But I think that just makes it so that, okay, then how much can you reduce? Or what would be the bare minimum that you could survive, you know? So I don't
Yeah.
know. I think you have to look at your comfort level as well, right? But I think there is that bare minimum, like at least you can get your loan repayments done, at least you can settle the normal bills, but perhaps not I mean, if you want to say, oh, I want to sustain my existing lifestyle, I don't know whether it's super necessary to do that lah. But if you can, all the power to you.
I'll take
I
expenses as well.
yeah.
Roshan, you were saying? Sorry.
Yeah. No, I'm just curious. I want to hear from like everyone else as well, but also after that, like, where would you put that, right? Because 6 to 12 months, I can kind of imagine keeping that kind of cash aside. But once you go like to the 18-month region, the kiasu in me is thinking, oh, maybe I should be. How should I be? Should I be putting that in REIT funds, bond funds, if it's beyond the year already? Like, so maybe we can get into that a little later. But sorry, we still haven't heard from Kara or Dividend Magic at this point. And yourself, can you already answered, right?
Talking about emergency fund, right? I will be taking expenses, and for me, I think the ideal one is 6 months. I echo Marshall, Stephen, MJ. Entrepreneur life, you need at least 12 months. The best is 18 to 24. Being a new self-employed myself, that has helped me a lot to go through this tough time, especially. Real estate agent isn't exactly getting a lot of business at this moment. Okay, and with regards to that, perhaps we can go to the next question. I think, Roshan, your question is very interesting. I'm sure a lot of people will be itching at this moment, looking to go into new investments after they have extra emergency funds.
Well, before we jump into emergency savings, so Roshan was kind of talking a little bit about where to actually keep your liquid funds actually. So for it to be liquid, it needs to be conservative. You need to be able to access it pretty fast as well. So if you put it in something that's kind of stuck there, then you're gonna have issues because it doesn't fulfill its purpose as emergency savings. Personally, I think there's about 4 or 5 different options. So the ones Malaysians are most familiar with would be basically their savings accounts, which basically earns you peanuts right now. Even the higher savings accounts aren't that much better, 1-2% ish kind of range. Fixed deposits, a lot of Malaysians still love that. It's one of the most popular articles on the mypf site as well. But even that, as you know, with all the rate cuts, and there's rumors of another rate cut in the next Bank Negara Monetary Policy Committee meeting, that might hit even lower as well, or it's already at a pretty much low point. So other than that would be things like money market funds, which may make sense, especially for businesses, and I'm sure Idaham will want to chime in a little bit on that in a bit. Other than that as well, you can also actually put in a mix of actually money market funds as well as actually bond funds actually. So a lot of people don't realize that money markets, they are just like savings accounts. They're liquid, they're conservative. They are actually bonds as well, just that the rates are a little bit better because it's actually invested into things like bonds or even fixed deposits, which they have actually locked in into a longer tenor. So for example, they locked in fixed deposit at higher rates, 3%, 4% even, for over a period of 48, 60 months. So that's something you can enjoy as well. The fourth one, and then I'm going to talk about something a little bit controversial, is the fourth one is that if you actually have a property loan where your property is actually flexi or semi-flexi, and you really don't need that funds, and you could easily put it in and out, you can actually consider putting it into your property loan, where you will actually technically get the rate of return because you're reducing the capital and the payments that you need to make on your property loan. So for example, your property loan say about 3%, so you're effectively earning 3%, though you don't see that money. Now, with that being said, there are some people who actually say that, hey, you should be putting it into an endowment, or in layman's terms, it's commonly called as a savings plan. But the problem with that, in my opinion, and I'd love to hear what others think as well, is that an endowment or savings plan is actually not liquid. It locks in your money for a long period of time and you can't access it at all. So to me, that fails actually, because it doesn't solve the issue of liquidity. And also the other one that you really need to have is being conservative.
No, we just had this conversation this morning, Stephen, on endowment plans over on Facebook, I believe. Okay, probably maybe I can share with all of you how I store my emergency funds. I have a current account. So I have, besides my company's account, my own business bank account, I have my own I have my own personal current account. So when money comes into my business account, I will actually transfer the money to my current account. And then this is just one portion. This is basically I would treat it like a, how do you call it? The company's petty cash. Yes. So this is basically my petty cash account. And if, let's say, if my petty cash account is running low, I'll actually transfer money into my petty cash account. But besides that, I actually store my money in money market funds. For those of you who don't know what money market fund is, it's actually it's more like a mutual trust fund. It's something like a mutual trust fund, but the underlying asset behind this is actually a more secured assets such as fixed deposits and also certain low yield investment assets, right? So that is how I store my emergency cash fund at the moment.
All right, thanks for sharing that, Marcel. Yeah, Idaham, you have unmuted yourself. Yeah, you want to go?
Yeah, so basically, another option for emergency fund is, especially if you're Bumi, is that you can put it in ASB or Tabung Haji. So these are, I would say, fits the purpose of an emergency fund store. Basically, number one, it's very conservative. It's liquid, pretty much liquid. You can withdraw it at any time. ASB and Tabung Haji, you can even do online withdrawals. And definitely, I think the strongest benefit would be the rate of return. Like ASB last year, I think it gave somewhere around, was it 5% in total? So definitely fits that definition of an emergency fund asset.
How about from the aspect, I trust there are a lot of entrepreneurs, business owners here as well with us this evening. So Giant, how about for money market funds? Are they suitable for entrepreneurs, business owners?
Oh yeah, definitely. Because at the end of the day, if you compare it to FD, and depending on how much your company makes in that particular year, for FD, definitely you'll get tax. But for money market funds, it's pretty much tax free. So basically it's a good place for you to store the excess cash, or at least the cash that you want to roll, let's say for the next 3 to 6 months. Definitely money market is a good place for that.
All right, thanks for that, Giant. We are going to go into investing, which I'm sure everyone is excited out a little bit. And just to reset the room, a warm welcome again to everyone joining us this evening. It's our inaugural episode as we just go right into the start of it, which is just looking at personal finance and investing and why that's important. Yeah, so feel free to follow all of us, and we'll get notified of when the next session is on. So before we actually go into investing, it would be remiss if we don't talk a little bit about risk management or insurance. So anyone would like to jump in on that? Maybe Marshall would like to start us off.
Probably I'll go last, but I would like to hear from the floor. Especially Lee. I don't think I've heard you a lot during this session.
Yeah. Sorry, Stephen. You were saying risk management in the form of insurance, like personal insurance. Are you talking about that?
Yeah, in the form of insurance. Or maybe let me turn on the heat a little bit. So you, Lee, have shared publicly in your site, and I quote, "You don't need life insurance." And I know that you have stated you only have medical insurance and no other insurance. So don't you think, Lee, that risk management is required? I'm sure you do some form of risk management for your investments, but insurance, don't you need risk management for that?
Okay. A little bit controversial, but yes, I don't think I need life insurance. Firstly, because I don't have dependents. So normally life insurance, it's the payout is when, let's say it's me, I get the policy, I pass on, and then the money it will pay out to someone else, to my dependents normally. So I say I don't need life insurance right now is because I don't have dependents, and I'm only afraid of medical fees next time. So which is why I say I need medical insurance only. So yeah, that's my point of view. Of course, I've been a lot of people have been asking me on the same question, why I don't need why I don't need life insurance. And yeah, right now, but in the future, let's say I get a family, I have children of my own, probably I might need life insurance. But then again, maybe not, because at the end of the day, if someone's investment portfolio is large enough and there's enough income, passive income or active income coming in, I should be able to will off or pass on my wealth to the next generation, so they at least can continue living without me around. So yeah.
All right, Giant and Marshall, both of you are financial planners. What's your response to this?
Actually, I don't think my point of view is actually very different from Lee's, opinion, because for me, I also think that you need to have a medical plan, because there is no limit to the downside. As in, you can't predict how much your medical fee would cost. So that's why having a medical plan is very, very important. But when you ask whether should everyone get life insurance, I also agree with Lee, because life insurance is actually more for people with dependents. But there is also something that I would actually point out a lot, which is that's not very commonly brought out in the world of insurance, because which is this thing called the personal accident insurance. Even though there is a possibility that if you don't have dependents, anything happens to you, you pass away, then that's fine, because no one is relying you on your money. But what if there is a case where you're not totally how do you call it, a TPD, total and permanently disabled, but there is a chance that you may meet with an accident and be partially disabled. And when it is partially disabled, sometimes you may not be able to look for an active income, that you may not be able to replace your active income that easily. So I believe that besides having a medical plan, right, the next most important thing is actually to look at a personal accident insurance, because frankly speaking, the premium of a personal accident insurance is actually not very high. Frankly speaking, for my own personal insurance, right, I only have a medical card and also a personal accident insurance, and the premium of both of this insurance is not more than 2,500 a month. A year. So it's not a lot. A lot of people will go for huge investment links, probably because they have dependents. MJ, probably you may need to chip in on this, but because I'm still single and I don't have a dependent like Lee mentioned, I don't have a proper huge life insurance because of that.
Okay, I'm just going to jump in a little bit for both Lee and Marshall's side. So the part to Lee is how about for disability and critical illness? So how does that if yes, you don't have dependents, but if you have a disability or critical illness, if you can't pay that off, then you may need to rely on someone else and be a burden. And to Marshall, personal accidents, I agree, they're cheap. Every dollar of coverage, you probably get 1,000 times coverage, compared to investment link, where every dollar you probably get 100 ringgit of coverage. But my viewpoint is that if you actually have already enough disability and death coverage, you actually don't need personal accident coverage.
Okay, sorry. Just to clarify, I do have personal accident insurance. I just don't have life. So Marshall is right. The premium is really low for PA, so I got that. and my medical is a little bit on the high side because, like I said, I'm really afraid of medical fees in the future. As for critical illness, I'm fortunate enough to have I think a large enough savings which are invested. So hopefully that will be able to sustain me in the unfortunate event that I get any critical illness on my part.
All right. Thanks, Lee. I generally, to be honest, I agree with you that not everyone needs coverage, even medical. Actually, if you are actually willing to go to a public hospital, and you're okay with the wait times. Actually, I think our public medical healthcare system is really good. Just the wait times maybe might be a concern for some. So medical coverage might not be for everyone as well. Yeah.
I don't really agree with that, like Stephen, with all due respect, because I think we need to have some form of flexibility. That's the whole point of personal finance, why you should plan for your finances, because we have to look at the cost versus benefit. Looking at just having the option of relying on public hospitals, sometimes it might be, it could cause stress, because personal finance is not just looking at numbers only. From my point of view, like what I started, the number one thing you need to know about personal finance is actually to know where you are and also where you want to be. The whole idea is actually to make your life a lot easier and also simpler, and also the most important thing, stress-free and fun. So I would actually think that having a medical card is the most important thing when you look at insurance. And just now when you asked me whether if a person's life insurance is enough, should they look at personal accident plans, I think it should be the other way around. You should look at personal accident plan first, then only once you have dependents, once you have children of your own, then only you look at life insurance. That's my point of view.
That's interesting. I don't recall having any personal accidents insurance so far, but I do have a medical card and a critical illness because I'm not a financial planner, so from what I was told or I understood, that there is a lot more chances that female gets certain cancers that is quite common in Malaysia, and only after I got married, then only I decided to get a life insurance for my spouse. I mean, for myself, which he's the beneficiary, and then eventually for our kids. Yeah. So personal accidents was not in my mind, but after hearing what you guys said. But let's say at my current situation now, as a mom, as a wife, I have life insurance, I have medical card, I have my critical illness. Do you guys think a personal accident insurance is necessary?
I'm going to ask you a question because I get this a lot actually. A TPD will only pay when you are actually TPD, which means total and permanently disabled. So what if there is an accident that you only lose one arm? I put this very lightly, but losing an arm is a very, very serious thing. But what if you only lose one arm? TPD won't pay insurance company won't pay out the amount of money because you lost an arm, because it doesn't fall under the definition of TPD. So that's why I see personal accident as a very important tool to actually mitigate, to cover the gap where if it's a very small, there is a very small disability in the eyes of the insurance, but very likely it will actually cause your life or your daily routine to be upside down already. So that's why I see a personal accident insurance is actually very, very important, and also it's not very common to see people with personal accident plans around.
Thank you for sharing that perspective. Yeah, something to consider about.
All right, and here we have Chun here. Chun, do you have a question for us or comment?
No, actually, just building on what Marshall was saying about personal accident. By the way, I work for Five Life, so I actually sell term life insurance. So, building on personal accident, for me, basically, personal accident is actually quite important for depends on your job, right? So, if you travel a lot, personal accident is really, really important. because that covers your traveling. You know, like there could be accident happening to you and all. And also, correct, Marshall, if you do amateur sports, so there are a lot of personal accident insurance that covers that, right? So what if you break your legs, right? What if you broke your hand, and those are not really covered by other kind of insurance, and personal accident actually do cover that, and also sometimes there's traveling and all that stuff. So yeah, it is an enhancement to overall insurance package, because you can never cover enough, right? Like insurance is just buying for possibility of a small minor thing that can happen. So you have life, you have medical, you have personal accident, you have critical illness, right? So everyone might have different needs, but personal accident is a tool to do that, or for that purpose.
All right, thanks for the insight, Chun. And yes, it does serve a tool and a purpose, actually. That's why it exists as well. Sean, there's something that you want to share with us?
Yeah, I just want to echo what Marshall and Chun said. Like, basically, I'm a life planner with Grayston. And what I have to say is, yeah, it is true. Personal accident is quite cheap, and it's very important, especially if you travel a lot, or if you are involved in like a lot of sports, or you do a lot of body movements, like things with body movements. But one thing I want to say is a lot of people neglect critical illness. A lot of people think they have their medical card and it's enough. But one question I always like to ask is, after you have recovered, can you go back to work straight away? So that's where critical illness comes to play. The protection of the critical illness comes to play.
Yeah, that's so true, Sean. Yeah, most people are actually undercovered, especially in critical illness. Yeah, thanks for sharing that input as well. Patricia, you have something to share or a question to ask?
Yes, I have a question to ask. Good evening, everyone. I'm a follower of Dividend Magic. I have a question not about insurance, but about investment.
All right, Patricia, I'm going to stop you right there because we haven't moved into the topic yet. I'm going to leave you on stage, and after we start talking about investments, I'm going to invite you to talk about that in a little bit. All right. All right. So with that, I'll give, I think, one last person to talk a little bit about risk management before we go into investments. Giant, share any input on this?
I think Marshall, Lee, and the rest of the speakers has pretty much covered. I think the most important thing is, again, looking from the cash flow perspective, is that please take a look, especially those in the audience here, please take a look if perhaps maybe you're overpaying for insurance, like you're paying more than what you're supposed to. Recently, I had a case where I had a client who I think he was earning around 6,000 a month gross, and he was paying about 1,000 plus for insurance. And when I look at the benefits of coverage that he received, he can actually pay less, taking up a different plan from a different company. So I think it's very important to periodically look at and perhaps see, or maybe I'm overpaying for something that actually I don't need that much of coverage or benefits or whatever. I think that would be my point of view.
Good thoughts as well there, Giant. And it's so true, overpaying can be an issue. So you need to have the right tools, whether that's personal accidents, medical coverage, term coverage, whole life coverage, endowments, etc. Each of them have different specific purposes as well. But generally, though, one other final thought would be, to actually keep your insurance and your investments separate. So with that, let's move into the topic of investments, and let's get maybe Lee to start us off. What's the number one thing that people need to know about investing?
Okay, so investing. Yeah, so as most of you would know, I'm mainly in stocks. And for this year, I think investing, it's really, I think, volatile right now. So we have seen that glove stocks, the whole debacle with GameStop, and over in the US. And I think a lot of retail investors, a lot of newbies, a lot of new investors are coming in. So I'm actually very cautious right now. So I might be taking profit a little bit and then holding more onto my cash and sort of waiting for the next opportunity, the buy opportunity to come. And yeah, I can't tell at all right now the stock market. All I know that I feel that it's a little high on the high side. The valuations are really high right now, especially in the US, the tech stocks and all. So yeah, my that's my view. I'm moving more into traditional stocks. If you guys are interested, yeah, that I'll be looking to go into traditional, more on the recovery play like right now.
What's traditional stocks? Just a quick one.
Traditional sectors, power, infrastructure, construction, banking. Because if you guys have been looking at my page or my portfolio over in the US right now, I'm actually very heavy into tech stocks. So I'm looking to move into, like I said, the traditional place.
All right, thanks for sharing that input, Lee. And definitely on highs actually. With that, Patricia, you had a question.
Yes. Hi, I want to ask about investing in unit trust using my EPF savings. Currently, I'm using an UTC because my financial knowledge is not very strong and sound. So I invested quite a bit using the UTC, but I've also read from some of the blogs that most people don't want to use a UTC because of all the charges. So for somebody like me, right, who don't have a lot of financial knowledge, right, do you think I'm doing the right thing or not the wrong thing?
I think as in all things, the answer is that it really depends. So of course, just a general disclaimer, anything that we share should not be construed as financial advice. So we're sharing more for informational and educational purposes. Marshall, Giant, any input on that?
Right. Okay, so if you choose to invest your EPF money into unit trust, right, what you can do now is, since, if I'm not mistaken, since 2019, EPF has actually introduced a new platform for us to invest our money online without going through any UTCs or financial planners. So what you need to do is actually, go to EPF, look for iInvest. I think the platform is actually called iInvest. And you can actually, shop for your funds. But if your question is what funds to buy, it actually comes down to what is your exit strategy again, what's your end game. I hate to repeat this like a broken record, but if you're asking what funds to buy, it really depends on your risk appetite. It also really depends on when are you going to exit. Is your investments wait, this is for EPF. So EPF is more for long term. So if it's a long-term plan, probably you can actually look at high growth funds. But again, when it comes to retirement, everyone's retirement age is different, and I'm not too sure how old are you, Patricia? How far are you away from your retirement? But in the end, it comes to what's your end game.
All right. So just to because earlier there was a mention of UTC. So for those unfamiliar, that's for a unit trust consultant. And technically, through the iInvest platform or EPF, you can actually still use a unit trust consultant or a financial planner if they're actually okay with 0% fees actually. So they can actually still provide you consultation and advice while still actually enjoying the 0% fees. Yeah. Giant, any thoughts, or even Lee actually, because you're muted.
Yeah, sorry guys. Oh, hi, Patricia. Sorry, I didn't get to say hi earlier. So, your question on UTCs, unit trust, and versus other investments. So there isn't a right or wrong answer. That's the first thing. There's no right or wrong way. I think most of you know my views on unit trust. I don't like them because only of their fees. It's not their performance. Don't get me wrong. You still can make money with unit trust. It's just that you could be making more. That's the point I've always been trying to make because of the fees. So Malaysia's unit trusts, especially if you go to the traditional ones with the consultants, the fees are really high. So if you want to go the route of unit trust, maybe try an online platform where you get to reduce your upfront fees. And then if you can have a look at robo advisors, I think they are doing almost the same thing as unit trust, but they charge you cheaper. And yeah, that's my thought. So a lot of people think I hate unit trust because of various reasons, but actually it's just I don't hate them. It's just the fees are high. You can make money, but you could be making much, much more over the long term.
I'm sure you're looking at returns as well, Lee. And I know because I look at your portfolio and even for shares, etc. And we share a lot of similar thinking in how we look at things. I think the industry is actually changing as well. Unit trusts are changing. The unit trust today that you see, it's not the same unit trust that you saw 5-10 years ago. Fees are going down zero. A lot of financial planners, you can actually get unit trust at 0% sales charge. So I think that's a game changer as well. Uh, Giant, any thoughts?
Yeah, I think it's important that whoever that you work with, whether it's a UTC or a licensed financial planner, the most important thing is they're focused on your needs, or so they're not coming over to meet up with you to basically maybe push certain funds or certain products on you. Maybe they shouldn't be like chasing sort of and more focus on their needs rather than your needs. I think that is always the key factor whenever you want to work with someone, whether it's a unit trust agent. I mean, of course, just bear in mind that when you do decide to work with another person and a third party, definitely there's some fees associated with it. Just make sure that they are focusing on you achieving your financial goal. So if you're talking about your EPF investment through a unit trust investment through EPF, the primary focus should be, how much return, or what is the end goal or end game, like Marshall has said, that you're looking for. Like if you're looking at retirement, for example, at age 55 or age 60, what's the amount that you do need to accumulate? And that's where you need to work around in terms of what kind of unit trust that you need to buy. Is it like going to be something that is focused globally? Is there some small caps? Is there some Asia ex Japan comes into it? Do you need to invest into bond funds or sukuk funds? So that's where it comes in. Yeah. So that's my point of view.
All right, and looking at other investments as well. So I know a number of us here also invest in shares as well. MJ, I know that you invest directly in shares for your child's education. I personally invest in shares both on Bursar and in the States, but not for my child's education. So how do you handle the volatility and risks as you look into that?
Of course, there are actually many other options to invest in. Stocks is something that I enjoy because I didn't came from a background that I'm aware or I know about stocks and investing in the early days. I only get to know about it when I was in my early 20s. So it took a while to learn because many of us, maybe ladies, when we ask for advice on whether can we invest this and that, some of us may get a lot of support that go ahead, find a good mentor or maybe attend a course to learn and then start on your own. We may also get like this encouragement, say that these are so risky, you shouldn't do it, you should let some professionals, like let's say find a consultant or someone to do it for you. Not to say good or bad, know your risk appetite and know what would you want to take charge of. So let's say I have a friend that she is more into property investing and that has been doing well for her. And I know there are parents also who actually invest in a property when they have a baby, and when after the property mature down the road, 20, 30 years time, they actually can cash out, and that is also a form of education fund for their child. So I just choose, should I say simpler? Or, okay, more like I can actually start with a smaller capital to begin with, rather than a huge down payment for a property. So yeah, so in terms of the risk mitigation, currently, like although many of them said that the kids, yes, they definitely have time luxury and they have more buffer to how to say, to make mistakes, but I'm not looking so much on that. Hence, I've shared before in some of the podcasts, the strategy that I'm doing for my daughter, little E now, is 75% on dividend and only 25% on growth. So with that, I'm not so worried about the volatility, and my intention with her portfolio is a long term, at least a 5 years holding period. Yeah.
All right, thanks for sharing that, MJ. And you kind of brought us into one of besides stocks, one of Malaysians' favorite topics, which is investing into property. Kenny, the floor is yours. And just as a note, we have 5 minutes of injury time, so we'll be going a little bit beyond 9:30. Kenny.
I personally invest in real estate as well, but what a lot of people don't know is that I also have a stock portfolio. I started off by unit trust, then went to stocks and properties. So I do own investment properties. And in terms of investing for properties, I do not have a children, but I was looking at the properties like giving me a certain amount of cash flow every month, and thankfully it's been doing well for me at properties. Not that I have many, and I echo MJ's part where you need to have a lot of money, especially if you want to start property. But these days, properties have been made very easily to buy. Some of the properties even give you money when you buy. Especially now during this pandemic time, you have a lot of good deals out there. So if you are actually into properties for investing, perhaps you can start looking at it.
All
Back to
right,
you.
thanks Kenny for that. And Sabi, thanks for joining us this evening. Do you have a question for us, or do you have a comment?
Hello, thank you for allowing me to join in. Actually, I have question regarding insurance, but then can I ask it now? Since
Sure, go for it. Yeah, it's a free for all in the last 5 minutes. Go for it.
okay, so basically, for insurance, I have dilemma regarding whether should I sustain my ILP, insurance linked takaful, insurance linked takaful punya insurance, because there is some pergaduhan lah between professional investor when they say why you want to pay more premium if you can invest the extra money so you can earn more. But if let's say it's for someone like me who don't go into stock investment or other investment, because I am very paranoid, so I took quite high premium, but it's basically it's just only took 10% of my salary. But then if compared to the normal medical card, it is much more expensive. So since there are few of you are licensed financial planner, I just want to know your thoughts on this for a common person like me. Should I stay with ILP or how? Yeah, thank you. That's all.
Sure. Thanks for the question, Sabi. I have one other question for you before I open up to the rest to answer. You can just mute yourself there, Sabi. All right. So the question is that with your money that you're putting into the investment link Takafu, what is the purpose? Is it for investments, just to clarify that, or is it actually for protection purposes?
Oh, it's for protection purposes, because as far as I know about ILP is, if let's say the amount of premium will be increased from year to year, so the investment could cover my monthly punya premium, so I don't have to top up my own money. It's like that.
All right, I was
Idam
waiting. Yeah, I was waiting to see if Giant will unmute himself, but yeah.
Yeah. Giant, are you there?
Yeah, no, because I saw you unmute, then I thought that you were gonna answer.
No worries, you go ahead.
So again, coming back to Stephen's question, which is actually what is the purpose of taking up the plan in the first place, and just making sure that whatever benefit that you do take with that particular plan cover all the necessary in terms of if anything were to happen, you know. So but I am from the school of buying insurance purely for protection and investing the rest. So you know, without more information, I can't give the right answer in your specific scenario, Sabi, but definitely there are cost savings that you can get from paying for a term plan, but there are that consideration that cash flow consideration that you were saying, which is the investments in the ILP would help to defray the increase in the future, if any. Yeah, because some term plan, they do increase after 5 years or 10 years, depending on your age range. So I can't say exactly what you need to do. Perhaps you do need to meet up with a licensed financial planner or maybe a good insurance agent to perhaps take a look again in terms of maybe are you spending too much on your insurance, or maybe you're actually underpaying for your insurance. So yeah, that's pretty much my thoughts.
Okay, on top of that, I think I think we should also give some value to our Sabi. I think her question was actually whether should she Sabi, your question is actually whether should you terminate your ILT, right? Investment link Takafu, right?
No, it's not like whether I should terminate or not, because I believe I still can afford to pay, because it just took only 10% of my salary. But then since there are argument on Twitter regarding this from
Right.
the agent and then the professional financial planner, so I just want to know your thoughts on this, because there is no end of the argument.
Yeah, I think you're absolutely correct because there's no one size that fits all. But if you have a ILP, right, or ILT, investment link Takafu, the beauty of it is it's actually very, very flexible. What you can do if let's say if you really want to go into separating investments and insurance, you don't really have to terminate that plan, because if you terminate the plan, especially if your insurance policy has a medical rider in it, very likely you will need to wait for another there's another waiting period if you get an insurance if you get a medical plan from another company. But the beauty of an investment linked plan is actually you can reduce the amount that you pay for your insurance, so you don't have to buy a new insurance. What you can do is actually just I'm not sure which company did you bought it from, but you can actually look for your agent and say that you want to reduce the premium that you are paying. But this is also subject to how much is the insurance slack, meaning that the difference between the premium you are paying and also the cost of insurance. Usually for investment link, there is a difference between the cost of insurance and also the premium. So what you can do is actually to reduce that. If let's say if you want to separate investments and insurance, and actually keep the same plan. So in this way, you don't have to surrender the policy, number one. Number two, you maintain, let's say if there's a medical card, number two, you can maintain the medical card without going through the waiting period again. And number three, there's actually a cost savings if you do this, because if you choose to buy another insurance from either an insurance agent or a licensed financial planner, you have to pay the commission again, all over again. As we all know, insurance, that we buy, there is usually the commission element into it. So if you really want to go through this route, you don't really have to surrender it. All you need to do is actually to modify your plan and reduce the premium.
All right. So yeah, with that,
Yeah, thank you.
Sabi, you can go ahead and follow Idaham, and you can have a private chat with him on this in more detail. I'm going to be bringing the room to a close in a few more moments, actually, but just to kind of wrap everything off, we're just going to go one round, and yeah, get everyone to share, one key thing that everyone should take away from this session. So maybe MJ, why don't you start us off to close up the session?
Hey everyone, for everyone here, let's say if you would like to take a step to kickstart your personal finance journey, may it be from saving up your emergency funds or tackling debt or even investing, I will encourage you to take a step, have the courage to speak to someone. It could be a trusted friend or like some of our certified financial planners in the room to get a clearer picture to move forward. Yeah.
Thanks, MJ. Kenny? Kenny, your thoughts?
Oh, okay. You want to start personal finance? I think I will quote Aristotle, say, "Know thyself," which Marshall actually brilliantly started off us with. I think it was Marshall, right, that started off us with know yourself first. That is where I would start. Looking back for plus 10 plus years, that's where I'll start. So I hope all of you that came, you all have something to take away from this session. And if you are actually interested, please follow Steven for more, and then we will do this weekly. And feel free to suggest topics for all of us. All right. Have a good day.
Kai? Thanks, Kai. Roshan, your thoughts?
Yeah, I think so. I started this off by talking about emergency funds. So I'm going to wrap it off by talking about investing, which is my favorite topic, right? I know it's easy to talk about, and it always sounds. I mean, to a group of people, investing sounds like fun, but to a big group of people, it sounds very scary. But I think for your long-term preservation, you do need to look at different vehicles, whether it's putting more money into ETF or looking at different options. But ultimately, I think it comes down to one. I think was it Kenny who said this, it's understanding ourselves, right? What are our risk tolerances? That's the first thing. What is your limit? What's your risk tolerance? What is too much risk that you can't sleep at night? This is a personal experience for myself as well. I once owned Apple stock, guys. I owned it when it was $15 a share, but during the US-China trade war, I couldn't sleep at night because it was such a sizable portion of my portfolio. It was too much. And yes, of course, I have FOMO right now because it's God knows how much more. But the lesson I learned from that was that it was too big a position in my portfolio for the risk tolerance that I had and where I was there. And then number two is, of course, always understand what you're investing in, no matter what, whether it's a stock market. Look at the whole GameStop situation. Yes, a lot of people made their money, but a lot of people lost money because the same thing with rubber gloves. A lot of people made money when it was cheap, when it ran up. People bought when it was high, and it fell again. Don't jump on the hype unless you understand what's going on and what is the fundamental value of it and things like that. Even Bitcoin. Yes, people don't understand how to value Bitcoin, but there is a longer term thesis to Bitcoin as a long-term hedge and all of that jazz. you must understand whatever you're investing in or putting your money behind. Don't go in blindly. I know it sounds like very common sense, but you'd be very surprised to know how many people actually do something like that. And with that, that's all I have. Thank you so much for having me here. And sorry for the selfish plug here, but if you want to learn more, there's always Ringgit and Cents every Thursday at 9:30 a.m. on BFM, or you can check out the podcast. We do a lot of interesting conversations, and I'm sure, thank you so much for having me here.
All right, and you can know how much Roshan loves to talk as well. Yeah, he gave us like I think like 3-4 tips in one. But yeah, definitely don't FOMO. And I kind of echo those thoughts as well. Investing, asset allocation, those are topics that I'm very passionate about as well. So knowing really your risk profile, how much to invest into different asset classes makes a major difference. Actually, it actually affects about 40% of your returns and 90% of the volatility or the risk that you're actually facing just by doing the right risk asset allocation. All right, so that's my wrap up thoughts. Lee, over to you.
Yeah, so I think Roshan summed it up pretty well. Knowledge is important. So there's a lot of noise in the market right now, especially with a lot of new retail investors coming in. There are a lot of investment gurus coming up, a lot of classes they're offering. So I would like to caution everyone against listening to what people are telling you to do. They always have motive is what you should have in your mind when someone tells you to buy this or to sell this. So do your own research, do your own due diligence, which is what I always tell readers to do. So yeah, don't ignore the noise. If you have the right research, if you have done your homework, stick to it. Ignore all the noise. Not ignore advice, but just ignore the noises out there, and stick to your guns. Don't just and always stay invested. Yeah.
Yeah, stick to your guns and to your plan. Giant, over to you.
Yeah, so FOMO, I think, is something that a lot of people are maybe having right now. Like, Bitcoin today just went up to 51,000. And then I'm lamenting the fact that I bought it at 12,000 ringgit and let go sometime last year. So the thing is that there's a lot of things going on right now. There's a lot of different type of products. There's a lot of different opportunities, even if you want to say it that way. But don't be too caught up. Like I think was it Lee that mentioned this? Don't be too caught up in the hype. Oh, I must have a robo advisor investment, or I must have a stocks, or I must have crypto, for example. Sometimes you can just keep it simple. Even like some people was asking on unit trust. Unit trust can also be very exciting depending on the different type of selection. I mean, maybe people are not aware, in the whole of Malaysia there's over 300 different type of unit trust funds that actually can fit different type of risk profile, portfolio, financial objectives. So definitely read up. There's a lot of financial resources now compared to like 10 or 15 years ago that you can refer to. But again, do your own due diligence, and definitely don't take unnecessary, or don't make unnecessary decision until you're very sure of you're very you understand why you're going into that particular investment, and rather than just buying into the hype. Oh, I must go in because everybody says this is the thing to go in now. So yeah, that would be my advice.
Yeah, and there's even unit trust that you can actually invest in virtually, the ARK ETF as well. Even Marshall, you started us off. Why don't you bring us home?
I think you can do the closing, but I'm going to share something very quickly that isn't really mentioned throughout the whole hour, which is actually to also focus on your active income. I have a feeling that when we talk about personal finance, active income is always the bad guy in the room. We try to build our passive income. But you know what? Building your active income to be good at what you do every day, I think that is easier to that is actually easier to grow than, you know, starting to learn about investing from scratch. So let's say if you are very good at your day job, why not focus on that? Why not ask your boss, if you are employed, ask your boss that maybe you can start a side project, you know, what we call the intrapreneur. Ask him to fund your project, and then also, you know, do what you are actually good at what you are actually trained to do in your job, right? So I always think that active income is actually what people should also focus at, and not to neglect, and not to just focus on only passive income, making passive income, make money when you sleep. But what are we going to do if we are awake, if we are already, you know, making money? So I really think that, you know, active income is more of an underrated element whenever we discuss about personal finance, because it's
Yeah,
not really...
definitely. Yeah. Sorry, I had to jump in because I think it's so important, actually.
Right. Yeah. So, yeah, I see quite a lot of people. Roshan, you unmuted yourself.
All right. Because of time, though, we're
No,
bringing
no,
Okay,
I'm not going to say it.
Stephen, you should invite us in another chapter. I think today's 1 hour is not enough to discuss personal finance. We should go deep.
you know, today's kind of a little bit of an overview actually, but yeah, I totally agree. You know, the first and most important investment is actually number one, invest in yourself. Secondly, invest in your business, on the business or organization that you're with. And only number three is really then looking at, you know, investing into various asset classes. All right, so with that, we have wrapped up our very first inaugural session. Next week, we only totally glimpse a little bit of it, which is actually about crypto and Bitcoin. So join us next week as we go into crypto and Bitcoin, because we'll be talking about that in our very next episode. So yeah, do follow us. We hope you had a great evening. Thank you all for joining us, and we'll see you all next week on Thursday at 8:30 p.m. Thank you all.
Thanks, everyone.
Thanks, everyone. Thanks, Stephen.
Thanks
Thanks
for
for
Ciao,
coming.
everyone. Take care.
Thanks for coming, everyone.
Bye-bye.